Daljeet Singh is joining us along with Kunal and Nuresh. Daljeet, I want to talk about AMC space, Reliance Jio, all of that, because one would have thought that Blackrock Jio JV would actually cast a shadow on many of these AMCs because of commissions coming under pressure. They're planning a mass play, but other AMC stocks are also rallying. How do you see this part of the market?
Good afternoon, Ajay. No, I think this industry is poised for a very big growth. No, there is a very, very long runway ahead. As just now you were talking about premiumization and billionaires moving from one country to another. So this space is opening up so much. And now that this has become a cult, no, a few years back, I remember when we used to go to HNIs, it was very difficult to raise a few crores. Today, everybody starts with 10, 20 crores like that. So the ticket sizes have increased. There is a willingness to invest more in the markets. So when that will happen, obviously AMCs are the big beneficiaries. And with companies like BlackRock coming in, it will again, when a big player comes in, it opens up the market, no? And market actually expands. This is a growing industry, growing market. So obviously, getting one more player will not probably hurt the existing players. It will actually make them more competitive. It will make them get them more systems in place, processes in place. So actually, it will be good for the industry. I think that is what market is also believing, and we'll see how things pan out over the period. Once they start, BlackRock actually starts executing things, how they execute and how they works them. So, but it's definitely a space to be in because there is a lot of demand.
There absolutely is. Kunal won't talk about Jio Financial, not enough data to track that. But what about the rest of the market construct? I mean, I was just looking at Europe. They've started off sharply in the red. We've not done bad at all.
Yeah, we've not done bad. And I think what I can probably sense is two different types of markets. If you look at large caps today, the two sectors which have been more pain points for the markets, one of course is the IT names and specifically the larger cap IT stocks. And the other is financials as a basket. I think these two sectors have dampened the mood of the markets or gone to a corrective phase for themselves. But the other end of the market is pure in the way the mid cap, small cap indices have behaved. We've seen very good recovery. In fact, there are many fresh stocks which are now heading towards breakout or coming back into a breakout of their small patch of consolidation for themselves. So that also is a very strong sign or a telltale sign that we could be looking at two different types of divergent trends of the markets, that the index trends or the larger cap weighted names, these two sectors specifically, they could continue to be more laggards, underperforming as such. But the other end of the market, which is mid caps and small caps, I think that's where the action could probably continue.
Shivangi Sarda is joining us now in place of Nuresh, who's usually there. But Shivangi, Bank Nifty, I want to start with Bank Nifty. What do you look at the setup? How's the setup looking over there? Because that is also not contributing a whole lot in today's market.
Yeah, hi, Ajay, and thank you for having me on the show. So we have seen that, Bank Nifty, it did, start with a slight bit of a hope in this series, but then it could not hold at higher zones. Today, it has taken support near its 50-daily exponential moving average, but then again, we've seen that there's some sort of relief towards the private banking space. So we are expecting that this should, act as a bounce back move over here. So we are looking at 47,250 as a crucial support zones for a bounce back move towards 47,750 on an immediate basis, and then 48,000 if it holds near these zones above its 50-daily exponential moving average.
Okay, point taken. So that's about how the market mood is looking like right now. But shifting focus to what's happening in the market in terms of the individual movers right now. So yes, IT continues to be that pain point for now. What's holding out is perhaps the entertainment as well. That one has seen a bit of a spike. And then some of the auto names, select one at that. Motherson, for instance, is up 3.5%. You have Eicher Motors actually surprisingly doing quite well for itself today. Escorts too is actually holding up. On the losing side, Metropolis has taken a sharp sharp cut. Let's pull up the stock of Metropolis if that's showing that kind of weakness. So yes, down about 2 to 3%, but in futures it's actually taken a bigger knock right now. But just wanted to get a sense from you, Daljeet, as far as the IT sector is concerned, this weakness will be a buying opportunity, you believe? And that's been the question for a while now, but seems to be, if you go by the management commentary of TCS, that we're closer to the end of the, end of the tunnel, perhaps.
I don't think so. We don't believe that they are end of the tunnel. I think it will take some more time, and especially the BFSI segment, which is the mainstay for most of our IT companies. Unless that picks up, I don't think they will have too much to talk in terms of numbers. And there is so much of change going on in the industry with the generative AI and all of that. So how these companies will play all those things, I think we will have to give some more time. We were also expecting that probably we are coming closer to the end of this down cycle and maybe some things will improve. But with the commentary coming from TCS, I think our view is that probably it is better to wait for another 6 months or so. So we are not, as of now, I don't think we have any investment in IT. If there is, it is only very, very small in some small company. But otherwise, we are totally out of the sector. And probably for next few months, we don't intend to come into that.
Don't intend to come into IT anytime soon, but are you coming into telecom? Because that's the other heated one. Take a look at Bharti Hexacom today, up 13%. Jefferies, of course, believes that the fair value perhaps of the stock is much above the 1,000 rupee mark as well. And just what last week that stock had listed at what 570 rupees was the issue price, if I have it right, and already made 400 bucks, almost doubled. And of course, Vodafone Idea, the FPO is underway right now for Anchor, will open for the public on 18th as well. What's the view on a couple of these counters, Daljeet?
There's a lot of noise because of this Vodafone Idea issue coming in. That's why I think the sector is again in buzz. But if we see in terms of fundamentals, ultimately the story is still on the basis of that ARPUs have to increase. Now ARPUs are increasing by 2 rupees, 3 rupees. Companies want to do it by 20 rupees, 30 rupees. That's not going to happen immediately. In any case, the sector has only 3 companies. So there is not too much to do there. That's why we tend to avoid that sector. If we have to play indirectly, some of it we play through Reliance itself. That also has 1/3 of the portion of telecom. No? So if one has to play that, one can play from that side. But we tend to avoid because we don't see too much of structural thing happening as of now.
That's the take coming in on telecom. In the meantime, let's address the high flyers today, and that's got to be Exide all the way. In fact, a major chunk of that move has come in just month to date in that particular stock. And EV battery makers have been powering up ahead after the announcement of partnership with Hyundai and Kia for EV batteries came about. Shrishti is here to tell us what is behind that move that one has seen in Exide. Shrishti?
Well, yes, Exide as well as Amara Raja, they both seem to be really excited in trading session today, and that's especially after when Exide announced that they are coming out with an alliance with Hyundai as well as Kia. They have joined a pact for EV batteries in India, and that's indeed a very big positive for the company coming in. And after this announcement, we have seen a lot of brokerages going ahead and raising the target price for Exide specifically. So firstly, let's take you through what these brokerages are saying for today. Nomura has come out with a note, hike the target price to 485 rupees versus 233 earlier, maintaining a buy. Just yesterday, Morgan Stanley raised their target to 485 levels. Investec has also raised their target price, and even JP Morgan. What Morgan Stanley is highlighting is that the pact with Hyundai and Kia actually validates the capabilities, and it is likely to be a multi-year contract, and the government supported Made in India EVs is a strong for such tie-ups in the times ahead as well. So they are positive that going ahead, both of these companies can actually garner more of interest from all these OEMs. Wherein on Nomura's part, they believe that there is a possibility of import duties being imposed on the cells in the next few years, and they have also raised their multiple to the lithium-ion cell capacity at 3 times of book to value in line with the global peers. And we are aware that Exide did announce their pact with Hyundai and Kia, and this is giving confidence for Amara Raja as well. Because do remember that India's EV penetration, especially in the four-wheeler segment, is nearly about 2 to 3%, and in the times ahead is expected to improve. And both of these companies have come out with their capex plans for this particular facility. For Exide, they have said that 4,500 crores in the phase 1 is what they will be investing, and the first order from 2 of the major OEMs is already what we have got. And for Amara Raja, 1,500 crores is the initial capex, but going ahead, they want to raise it to 9,500 crores as well, with a 16 gigawatt hours of capacity. So both of these companies are really geared up, and that's why we are seeing the re-rating, because with the first order, it's the opening of the doors that has happened in the EV battery space for Indian companies, and Exide has definitely gone ahead and got that thumbs up from global OEMs. And similar is the market expecting that maybe in the times ahead Amara Raja could also come out with one such announcement. But in the race, who is coming first, then Exide is definitely leading the race for right now.
Thanks very much for that, Srishti. So Exide and Amara Raja both, which are upping their game as far as EV related batteries are concerned, and are setting up plants, and then subsequently they'll start supplying. But there is one listed company which is already currently manufacturing EV batteries and are supplying, and that is Exom Tele. The recent listing which happened, Exicom Tele, it started off as a battery manufacturer to telecom space, and then subsequently they diversified into batteries for EV as well. That stock has suddenly shot up 7% in trade. The IPO came around 180 to 200 or something, and now the stock has shot up because now people are realizing that this is also a EV battery play. Any thoughts on this company or overall the EV angle which the battery companies are now starting to display? Any thoughts there?
Yes, Ajay, we are holding one company there.
Okay.
We also wanted to play this story of EV, and that was one of the easier way to do. We chose the other company because that was trading at that time half the valuation of the first company. So in terms of valuation, it was a very attractive entry point, and now both of them are catching up each other. In any case, it was very clear that ultimately both are there are only two players which are of that size, and both of them are in the similar direction. They will invest similar amounts. They will also get the similar kind of opportunities. I think this order from Kia has removed that big overhang, which the question that we always used to ask these companies was that when these OEMs come, will they start manufacturing batteries on their own? It will be captive battery from their side. But with this order coming in, I think that has taken away that fear. Mostly, if the OEMs are willing to give this contract to outsides, that means this market is open for everybody. So I think that is what is giving a lot of confidence, and it's just the start of the industry now. The EV has a big runway ahead. So obviously, both these companies will do very well. I think we have already invested in one as a disclosure, and I think we are looking for a very good gain there.
Right, okay, just stay with us, Daljeet. Lots more to talk about. We'll continue our discussion with our experts after this very quick break.
So that's Exom Tele, which has shot up 8% in trade, apart from other battery companies. But some other stocks are also in focus, market platform stocks, and one stock stands out in that space is BSE. From 600 odd to almost, pull up the BSE Limited, almost 2800 now. It's run up quite a lot, but the way management has been guiding about new products being launched very shortly, there is a lot of interest still at these levels. But how are the charts looking for this one? Shivangi, BSE at 2800, does it provide opportunity, risk reward? Are you finding it okay even now, or some pullbacks? What levels to watch out for?
So, with the sentiments, now we have the increase in the number of transactions. And of course, this platform stocks are going to be in momentum. The stock is already up by, 30 odd % in year-on-year basis. And we've seen that, there has been buying at every small decline. So overall, the structure remains quite positive. And we've seen there has been a very strong pullback move in the last 1 month. So overall, the stock is a buy from these levels as well, and we are looking at 2950 odd levels for the next targets with a stop near 2780. So
A bunch of these stocks which are in focus. I want to also check in on what Gujarat Gas is up to. That had a positive start even in an otherwise weak market at open. Excuse me. They've signed the non-binding MOU with Indian Oil for accessibility of energy solutions. Gujarat Gas, of course, has completely given up all of its morning gains and it's now languishing at the day's lows. 3.6% of a cut coming in on Gujarat Gas. And the other one, of course, is ONGC. We've been marking this one. Of course, today there is news impacting ONGC, much unlike yesterday, wherein that brokerage upgrade came in and the stock was in a tizzy in an otherwise weak market. The windfall tax on crude has been upped, and that sentimentally wouldn't augur well for ONGC. But even after a weak start, you've seen the stock pick up from there, although it's off from the day's highs. Kunal, strong on the charts for ONGC. What is your next target on ONGC at 282 thereabouts right now?
Yeah, so 2 days of very strong volumes for ONGC, and that's I think the hallmark of the chart. So it's not too much of a price action, which is very exciting for the stock, but it's the volume action, because in the last 2 days the cumulative volumes for ONGC has been one of the best volumes the stock has shown. Especially at a point when the stock was almost at those 150, 170 mark. Start of 2023. So I think from there on, this is the first time where we've seen some excellent volumes coming up for the stock. Now there are two aspects which could probably occur into the stock price. A, it could go into a consolidation because the bulk of volumes have already shaped up into the stock price, as well as the news flows being a lot more buoyant for the stock. But on the other hand, if the stock manages to surpass today's high, which is around the 290, 292 odd mark, I think that could trigger a second round of an up move. So I would probably wait out for confirmation of 290 breakout for ONGC approximately, and I think that could be a trigger point to try and initiate a fresh buy.
Okay, point taken. Just wanted to highlight a few more stocks. Marksans Pharma is up 12%. If I have it right, MIT had been one of the buyers in a large trade that happened yesterday. And of course, VST Industries is the other one wherein RKD had increased the stake in a large deal that happened yesterday. So a couple of those names come to mind. Aegis Logistics is also have around 9%, and in the last few minutes we have seen a bit of a move on the likes of Saregama, Thomas Cook, etc. as well. So some of these buzzers in the trading session right now. But autos as a pack has been holding up quite okay. Take a look at the strength in Eicher Motors right now. The stock is actually bucking the trend quite nicely, 3% higher. And then of course there are other auto names as well which are holding up. Daljeet, what's the view on two-wheeler space? We talked about EVs and the kind of ancillaries you are making a bet on, but in the two-wheeler space, any names specifically?
In two-wheelers, we have in fact one of the largest exposure of our fund, mainly with the company that caters to the OEMs, and we have seen that they're performing very well in the last few months. The idea is that in two-wheelers, two things will happen. One is on the domestic side, rural portion was not doing very well. For last almost a year or so, rural was very, very low. And now in the last 1 month, we've seen that numbers have started picking up. And with this news flow about the monsoon being very well, and probably we'll have good rainfall this time, we expect that rural area demand should come back. So two-wheelers which are exposed to rural area, they are likely to get the benefit. Second thing is this premiumization. The higher end 350cc, 250cc, those kind of bikes, they are doing very well again. So instead of the demand is shifting from 100cc, 125cc to 150, 250, those kind of things. That means more realization for the company, and which will mean obviously better margins for the company. Third is the export side, which is picking up now. One of the big OEM was always impacted because of non-availability of dollars, having a lot of geopolitical tensions in those areas. Some of them have receded and the export numbers have started coming in. So the ancillaries which are exposed to these three things, they are likely to get benefit, and we have some exposure to some of them. Then also we have some exposure to the ancillaries which are supplying to the high-end cars like Mercedes and BMWs of the world. We've seen that both these companies have shown their best ever numbers in this year, this quarter also and this year also. So both those those ancillaries which are supplying engine parts or powertrain, they are also likely to be beneficiaries. So we are holding some of them.
Okay, good to get in that perspective. Always good having you on the show, Daljeet. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.